Good day crypto traders. Polygon's Matic is on the verge of a significant price movement. Polygon price consolidates for a third day with lower highs and higher lows. As bears and bulls push towards each other, a breakout will soon unfold. Expect to see a bullish breakout on the back of several technical elements that could bring Matic price to 90 cents, a rally of 50%. Polygon, Matic, price is on the cusp of a bullish breakout once it has completed its consolidation phase. This phase is entering its third trading day as price action reveals lower highs and higher lows, and supply and demand are pushed towards one another. Considering its behavior, it is clear that price action is underpinned, and with the relative strength index, RSI, subdued, a break to the upside is the most plausible outcome, holding 50% of appreciation for Matic price. Matic price sees bulls holding the cards. Polygon price has been trading sideways since mid-May, with no new lows, a clear sign that price action is underpinned. There is a squeeze happening, with bulls and bears drawing towards one another as supply dries up. We are getting close to the point where a breakout is likely to occur, and from the looks of it, Matic bulls will be on the right side of the trade. RSI is still very much below 50, offering room for upside, and no new lows have been printed since May 27. Matic price will probably jump towards 80 cents, which falls in line with the fresh monthly pivot and the previous monthly S1 support level, proving that this area or level holds technical importance. Don't expect a break above to be easy, but once over, a continuation of the rally is a given. The leg up that follows could stretch to 90 cents, with the 55-day simple moving average, SMA, as a cap to the upside, not tested since the rejection on April 22. The risk to the downside also comes from the consolidation, where bears will be using the tightness in bids and offers to swamp the price action with sell orders. That would break the supply-demand equilibrium and result in a break to the downside, with bulls fleeing the scene and pulling their orders to dry up demand. Price action would then inevitably drop towards $0.545 and possibly break towards 36 cents at the monthly S1 support level, resulting in a 40% drop overall. Bitcoin price prediction, BTC sets sight on $34,000. Bitcoin price jumps back above $34,000. BTC price jumped on the back of another shift in sentiment in just 24 hours. Expect to see more gains to come with futures in the green and BTC price setting sail for $34,000. Bitcoin, BTC, price is set to jump at least 13% as tailwinds hover over global markets. Although the background is still tainted by central bank tightening, with the Indian Reserve Bank the latest to join the RBA in implementing a 50 BP hike, traders are seeing the upside potential from governments slashing taxes to support living and spending patterns for households, and thus safeguarding the cash inflow into cryptocurrencies. As a result, cryptocurrencies overall are seeing their price action underpinned. BTC price, for example, did not make new lows as expected but is trading sideways and is ripe for a breakout towards $34,000, with the 55-day simple moving average, SMA, as a cap on the top side for now. BTC price has its first halt at the 55-day SMA. Bitcoin price has been left at the mercy and woes of global markets these past few days, with very choppy price action resulting. The $30,000 marker has been chopped up so much it is almost not worth using as a reference point anymore. Nonetheless, the jump above this level this morning shows how easily sentiments are shifting yet again in this trading week, as risk-on is back with a vengeance and futures are trading in the green overall, pushing morale and sentiment further into risk. BTC price sees these tailwinds coming in and providing a counterweight to the tail risks dragging on price action for far too long. Expect to see a rally back above $32,649.28, with a slight fade to test that level for support and then a pop higher towards $34,000. Bitcoin price faces the 55-day SMA as a cap on the top side, which is likely to be crucial going forward as it has not been tested since April 21 after a failed break and bull trap. Downside risk could come if sentiment shifts yet again into risk off, with the ECB tomorrow as a key event. Markets and traders will be watching every word at the post-meeting press conference, as the ECB is set to climb out of negative rates for the first time in a decade, and miscommunication would be disastrous for the euro and USD. If Lagarde misses the mark, dollar strength could result, which would create a headwind and push BTC price back towards $28,695.13 and possibly even a test of $28,000. How prices would react ahead of Ethereum's merge launch on testnet. Ethereum price shows the affinity to move higher but is subdued due to its correlation with BTC. Investors can expect ETH to rally 30% in an optimistic scenario. A 4-hour candlestick close below $1,701 will create a lower low and invalidate the bullish thesis. Ethereum price has been dilly-dallying for quite some time thanks to Bitcoin's tight consolidation. With intraday price action looking like a pump and dump for BTC, altcoins seem to have managed to evolve. ETH, for example, is reacting bullish to impulse moves and remains partially reactionless to minor downtrends. Regardless of the short-term volatility, the merge seems to be the most talked about topic for Ethereum and why it is a better investment option as opposed to Bitcoin in the coming cycle. What is the Ethereum Merge? Simply put, the merge is an upgrade to the Ethereum blockchain that will transfer it 100% from a proof of work, POW, to proof of stake, POS. The main reason behind this network update is to improve the scaling, which has been a major pain point, while retaining the decentralization and security aspects of the POW chain. While there have been multiple delays in the past, the developers have approximated that it should take place in August. As announced by an Ethereum developer, Ethereum's test network Ropsten will be merged, i.e., the chain will shift to POS on June 8. After Ropsten, the merge will happen on Sepolia and then Goerli, with 2 weeks of buffer time in between each upgrade. After the tests on these networks are confirmed to run without a hitch, the mainnet will be upgraded as well. The Ethereum developers and the team hope that this will happen in early August. What if the transition to POS happened today? While the merge has got many excited for fundamental reasons, others are speculating about its effect on the Ethereum price. One Twitter user, Corpy87, broke down what would happen if the merge were to happen today. According to his thesis, there are certain facts like the ETH issuance in POW and POS, daily fee revenue and the percentage of fee revenue that gets burned due to EIP 1559. After this, the assumption for the number of ETH sold by miners and stakers needs to be factored into the equation. The Twitter user then goes on to summarize that if the merge happened today, the total daily sell pressure, which currently stands at $10 million, would be replaced with $8 million in buy pressure. From a fundamental point of view, this flip in the narrative from an excess sell pressure to an excess of buying pressure would impact the price of Ethereum in a positive way. The technicals, which are currently stuck in a rut due to Bitcoin, will benefit largely from this imbalance of buying and selling pressure and propel Ethereum price into the stratosphere. ETH price and explosive moves. Ethereum price has produced a string of lower highs since May 16 and equal lows around the $1,700 support level. This consolidation, coupled with the bullish anticipation of merge, could send ETH flying soon. Separating the fundamentals from the technical shows that there is an equal high at $2,020 and that Ethereum price could rally at least 12% to sweep the equal high at $2,020. If buying pressure continues to build up, ETH will start collecting the liquidity resting above the lower high swing points formed up to May 16. Assuming Ethereum price sweeps the May 16 swing high at $2,164, it will constitute a 20% ascent. While this run-up is bullish, it is a short-term outlook and will likely be where the upside is capped for ETH. In the case that Bitcoin price makes a run for the $35,000 level, investors can expect ETH to follow suit and tag the higher time frame resistance barriers at $2,341 and $2,412, respectively. Regardless of the optimism surrounding the merge, sometimes, the fundamentals fail to translate to the price action, especially if the narrative does not match. In such a case, if Ethereum price produces a 4-hour candlestick close below $1,701, it will create a lower low and invalidate the bullish thesis. This development could see Ethereum price revisit the $1,543 support level. These indicators show Terra's Luna 2.0 price will quadruple. Luna 2.0 price explores the possibility of a trend reversal as it sweeps the range low at $3.50. A recovery rally could propel Luna to the range high at $10.24 and still have the chance of a further ascent. A daily candlestick close below the range low at $3.50 without a quick recovery would invalidate the bullish thesis. Luna 2.0 price has been in a downtrend since May 30 and has finally reached the lower limit of its range, suggesting that a reversal is likely. Investors need to be careful because this bullish outlook could fail if bears keep Luna below the range low. Luna 2.0 ready for a reversal. Luna 2.0 price has finally swept the lower limit of the $3.50 to $10.20 range formed on May 28. After a brief move above the range high on May 30, Luna was expected to take a U-turn and sweep the range low. As of June 8, Luna price has officially tagged the $3.50 support level, indicating that a shift in narrative is around the corner. Going forward, if the ranges are to hold, Luna's reboot should recover quickly above the range low at $3.50 and start rallying higher. The first stop for this move would be the midpoint of the range at $6.85. This run-up would constitute a 96% ascent. However, the ideal scenario would include Luna 2.0 price attempting to revisit the range high at $10.20. This climb would represent a 190% gain and is likely where the short-term ceiling is present for Luna bulls. However, considering the brutal sell-off from its all-time high at $30, the $10.24 level is hardly a place for rest. If the bulls have high conviction, they are likely to push Luna 2.0 price to revert to the mean. Drawing a Fibonacci retracement tool from $30 to $3.50 shows that the midpoint of this crash is at around $16.75. From the current position, this would result in a 392% gain for the average investor. Further supporting a trend shift for Luna 2.0 price is the relative strength indicator, RSI. This index is a momentum-based oscillator that helps monitor both the current, as well as historical, strengths and weaknesses of a particular market. After a massive crash, the RSI is hovering below 30, aka the oversold zone. Often, when an asset reaches the oversold zone, there is a shift in momentum from bears to bulls, suggesting that the buyers are taking over. Ultimately, this leads to a reversal of the underlying asset's price. Interestingly, this outlook falls in line with the technicals, which are also forecasting a shift in trend after the sweep of the range low at $3.50. Adding credence to the optimistic narrative for Luna price is the awesome oscillator indicator, which is used to measure the market momentum. More importantly, this indicator is forming bullish twin peaks. Bullish twin peaks occur when there are two peaks below the zero line. The second peak is higher than the first peak and is followed by a green bar. Additionally, the trough between the two peaks must remain below the zero line. For Luna 2.0, however, the awesome oscillator is yet to print a green line in the second peak. While the outlook seems overly bullish for Luna 2.0 price, a daily candlestick close below the range low at $3.50 without a quick recovery would invalidate the bullish thesis. In such a case, Luna could crash to its listing price at 50 cents.